On behalf of the conference team, we want to thank you guys all again for being here. We're really impressed by the huge turnout. I'll wait a little bit for everyone to get their seats taken. All right, so we're about to kick off our second panel, that is Innovation, Development of Frontier Products for Financial Inclusion. Our moderator is Camilla Nestor, Vice President of Microfinance Programs at Grameen Foundation. Our speakers are Inez Murray, Executive Vice President of Programs for the Women's World Banking, Greg Casagrande, Founder and President of the South Pacific Business Development Microfinance Network, Syed Mohsin Ahmed, Head of the Pakistan Microfinance Network, Rajendra Poudyal, Administrative Manager of Planet Finance Nepal, and Alexandra Fiorillo, Vice President of Ideas 42. Thank you.
Great, so we've got a really good panel this morning. I'm just going to open it up briefly and then turn it over to our panelists to share their own experiences with you around developing innovative and new frontier products for poor household financial products. So let's start by just imagining something. Imagine the only financial tool you had access to was a credit card. And not only that, but you could only pay it in cash, and you had to travel by bus to a central location monthly to make your payment. So that's sort of the reality of poor households who only have access to a loan. No savings account, no insurance, no payment mechanisms. It makes life very difficult. And we know from research like the fantastic book Portfolios of the Poor that poor households actually have incredibly rich financial lives. They are intermediating money on a daily basis at much greater rates than we thought, and are incredibly creative at cobbling together informal sources of savings, credit, and insurance. So we know this is the case, but microfinance has really lagged in developing new products and services beyond the standard group lending model, which really allowed it to scale. The efficiencies and, as Alex said, modularity of that model allowed it to be replicated and scaled globally. But we know now a couple things. First, the poor households really need an array of financial tools, and they're also not a uniform group. And we're starting to do a lot more work around segmentation. So segmentation by poverty levels, by gender, which is some of the work Women's World Banking is doing, by business line. Agricultural clients are not monolithic either. Within agriculture, there are very specific cash flow needs, rural versus urban segmentation. So a lot of that work is starting to happen, and a number of players are starting to design much more client-centered products and services. The challenge, though, is how do you continue to drive efficiencies and drive costs down when you're taking a more tailored approach versus a more standardized approach? And this is where innovations like the mobile phone and agent networks come in. We'll be talking about both the products themselves and how hopefully they will be driving costs down for the end client with the panelists today. I just want to make one more comment around challenges. So hopefully, I think we're all grappling with challenges in this space, and so hopefully the panelists will call out some of the things they're learning as we iterate and test new products and services for poor households. So we'll start with Inez Murray from Women's World Banking.
Thanks, Camilla. Morning, everybody. Okay, WWB, for those of you who don't know, most of you should, because we're in New York, is a network organization that reaches 26 million clients, 80% of whom are women in 37 countries. This morning I wanted to focus my remarks on one product category. We're innovating in 5 product categories: savings, youth savings, rural finance. Access to credit for women, believe it or not, is still an issue in particularly not in the SME space, but also in the individual lending space, businesses above the group lending space, and also in microinsurance. So this data that I've put up here is from the Microinsurance Centre, which was hired by the Gates Foundation to conduct a kind of an assessment of the supply and demand of microinsurance. So it shows us that only 3% of the low-income population in the 100 poorest countries are covered by formal microinsurance. When we look at our clients, this is our typical profile of the WWB network. Women aged 25 to 45, mostly married, children, and basically working at home for the main part. I would say Grameen is a similar profile. Working at home, trading goods and clothes. This is the average disposable household income, $30 to $700 a month. And when we're talking about the kind of risks and life cycle events that incur risk on women, we're talking about health of themselves, their husbands, and their children. Death of husband is a big issue, as is divorce, old age, and domestic violence, of course. In terms of the coping strategies that people use in a health emergency, obviously they save, and that would be the primary reason people are saving in our populations for healthcare emergencies. Investing in property and children in the hope that obviously the kids will take care of you if you're sick. And also we find making risk-averse business decisions in order to ensure income. In Morocco, for instance, we found that women were saving 40% of their income just set aside for health emergencies. And then afterwards, we know what happens to a house when a health event happens. People borrow money, sell assets, reduce household expenses, if they can increase their income-generating activities, and draw down their savings. So having an insurance policy can have a lot of economic implications, development implications. So when we did our demand research for microinsurance, really the kind of health insurance piece that was most relevant to women was maternity, as well as family coverage, and then life insurance for husbands and protection of kids. The Caregiver is a product that I'm going to describe that we've piloted in Jordan, and I think has tremendous replicability potential. I'm very excited to hear about OI's mobile phone platform, which could be indeed a very good channel to really scale this up. I'm sorry, I thought you saw all that. Okay, so in our network, 75% of the network members offer insurance, but mainly it is the credit life policies. And I have to say, in some cases, that's a real moneymaker for MFIs, not necessarily a great value addition to clients. Mainly the model now in microfinance is a partnership between the MFIs themselves and insurance companies, although some MFIs, of course, such as Card in the Philippines, have their own insurance company. Just to go to Jordan, where the pilot is, this is the Microfund for Women, is the network member we've worked on with this. They have about 72,000 borrowers. You can see their numbers look very, very strong. And we have all of their borrowers are now insured with this hospital cash product. So I'm going to describe what the product is right now. It's a cash benefit paid to borrowers after hospitalisation to help with costs for loss of business, medical expenses and travel costs. And I think one of the things to note about poor people is that they don't go to hospital literally until they're on their last legs, and partly the reason is they can't afford to go. Even if the care is free, the travel costs, the out-of-pocket expenses associated with hospitalisation, food, etc., and the loss of business income are all deterrents. So this product was designed with the savings capacity of the women, Microfund's women in mind. The product gives a benefit of $14 per night, up to 48 nights coverage per year, and up to 30 nights coverage per incident. There's no limitations for pregnancy coverage, no exclusions for pre-existing conditions. The policy is automatic with a loan, and the premium is $1.4 per month. And it was mandatory, as was necessitated by the insurance company. So the initial insurance company we worked on with this was Zurich, and then subsequently who worked with our local partner in Jordan, and subsequently we were able to, once we established the product in the market, able to negotiate, and we actually moved to a different insurance provider at much lower cost. The issue of no limitations for pregnancy coverage was very controversial. We actually agreed with Zurich that this would be the case, and after the first year of experience data, you can see why they then challenged our. We had to go back and look at old emails to prove to them that they had actually agreed to this. As of December 31st, 2011, we had sold 43,000 policies, nearly 2,000 claims. You can see the amount paid out. half of the claims were for pregnancy-related hospitalization. The claims are settled within an average of 10 days, and now we're looking at, we're actually designing a product that will cover the family, so that's being piloted. As part of this work, the thing about insurance, the old adage that you have to sell insurance, the issue of financial education is very much an important piece of this. So we designed, or with Jordan obviously, a graphic storyline that would help credit officers explain what this product is for women, and that it's a visual storybook with a character, and it goes through all of the different stages, which has really reduced the amount of time that it takes to teach women and then for them to make the claim, etc., going through. In terms of, very quickly, where we're going to take it, we're currently taking it into Peru with proposed countries, feasibility studies in our work plan, as you can see up there: Mexico, Morocco, Tunisia, Uganda, Kenya, Benin. We're expanding currently the caregiver in Jordan to families, and now we're developing also a new product line called Lifeline, which will cover dreadful diseases. So for a small amount of premium, for instance in Peru, for $3 a month, you can get coverage up to $100,000 in the event of getting cancer, and $100,000 in Peru will indeed cover you if you're going to live or not. It'll give you the medical opportunity. Because this is the business school, from a strategic perspective, just a couple of things to note. From the Unilever example of shampoo sachets in India, where all the Indians like to have clean hair, and the idea that poor people like a branded and high-quality product, but they can't afford, for instance, a bottle of shampoo. So Unilever decided to package shampoos into sachets that are affordable, and now you see them in every mom-and-pop store throughout India. But they make a lot of money, of course, through this product because it's selling a large volume. So applying that to microinsurance and kind of breaking down the health microinsurance into affordable, tangible product, so that in this market, for instance, the word of mouth is spreading around that this is a product that is useful for them. For the insurers, the biggest question in health insurance is that there's no experience data. In other words, they don't know in these target populations how many people get sick, at what frequency, what kind of illnesses they get sick from. And so this product is enabling us to build up this experience data, which in the Jordanian case actually enabled us to renegotiate the premiums and actually reduce them by about 40% the second time round. Thanks.
Okay, we'll shift to Greg now.
Great. Good morning, everybody. My name is Greg Casagrande, and I'm the founder of South Pacific Business Development Microfinance Network, or SPBD. SPBD is an independent network of MFIs working in 3, soon to be 4 South Pacific Island countries. We work in the nation of Samoa, in the country of Tonga, in the country of Fiji, and we are just now opening up in the country of the Solomon Islands. With regards to introducing new products and innovation in new products, there are 3 items that are really important or integral to the DNA of SPBD that helps us, I think, to create innovative new products. And that is, 1, always being very closely attuned to the voice of the customer. So I think it is absolutely critical to be customer driven. In the markets in which we work, which have very, very small populations, if you don't hear the voice of the customer, then there's going to be no market. And so just as a FYI, Samoa has about 180,000 people. Tonga has about 110,000 people. Fiji, a big country, has got about 880,000 people. And Solomon Islands has got about 550,000 people. So these are small markets, and it's very imperative that we listen to the voice of the customer when we're thinking about designing new products. 1. 2, we have this culture, this thing that I was in the auto industry prior to coming to the world of microfinance about 13 years ago. And one thing that I took from, and I was in Japan in the auto industry, and one thing I took from the Japanese auto industry was a concept called Kaizen. Kaizen means ongoing, continuous process improvement. Okay, and so that is something that is baked into the DNA of SPBD. All of our staff, whether in Samoa, Tonga, Fiji, they all know Kaizen and about continually tweaking our processes and tweaking our products so that we can continue to better meet the needs of our clients. And so I think that's an important thing to keep baked into your organization. And the third thing is to understand the business model. And so when we introduce a new product, we need to understand the business model. Quite often when we're introducing a new product, we will do so with some sort of partner. And it's very important to get upfront clarity with regards to who is responsible for what, how much the customer is paying, making sure that you're giving the customer a very good, viable, value-laden proposition, and that there is sufficient revenue for you to cover our costs and for the partners to cover their costs so that it can be a long-term sustainable proposition. So with that background, we have introduced a number of what I think are innovative or new products, especially for our region, over the last several years. Some of them, and I won't go in depth over all of them, but I'll just lay out some of them right now and I'll go in depth on a few of them. So micro savings is a very big thing. We're not a commercial bank, but we take savings deposits. Micro life insurance is a very important thing. We do mobile banking with M-Pesa right now, as well as mobile banking with Digicel in Tonga. We have a renewable energy equipment financing product that is in the process of being rolled out. We have had a team from Columbia University Business School here to help us design the financing of micro cooperatives that will be buying coconut oil press equipment and providing financing and export financing to help them export the oil overseas. We're looking at micro pensions, and I think I skipped one. And the use of financial diaries. And so anyway, so those are all sort of innovative new products and processes that we have either launched or in the process of launching within the next 12 months. So I'll just go over a couple of them in very brief detail. So with regards to micro life insurance, we see this as being very high value to all of our clients. In each of the markets in which we work, well over 95% of the people in our countries would have no access to life insurance. Okay, yet people die all the time, and so when they die, quite often they leave a significant financial burden upon their family. Not only has one of the key breadwinners died, and the family is now out of that money, but there are also significant costs for the funeral and for, unfortunately in each of the markets in which we work, childhood education is not free, and so there's stress perhaps to consider taking the children out of school, and so on. So we have a benefit that covers the designated beneficiaries of any of our clients who die, and the coverage can go from anywhere from $400 up to about $6,000. Those are US dollars. And families find it very helpful to, with the funeral costs or with helping to make sure that the children can stay in school, or with the costs for the first year or so after the breadwinner has died. The way it works for us, in Fiji, we work with the Life Insurance Company of India, which is one of the world's 10 largest insurance companies. We partner with them. In Samoa and Tonga, the life insurance industry is completely unregulated, and we are self-backed insurance organization. And so we have two different models. Anyway, in each of the markets, all of our credit clients must take out a certain minimum coverage, which is about $400 US. The savings clients can also take out coverage if they like. The coverage is extended for 1 year, and the premiums start at $4 a year. And so our clients find it very affordable and an excellent proposition. We also have a micro savings product. As I said, clients in all of our countries find it very expensive and very difficult to bank or save with any of the formally regulated commercial banks. The big banks in our markets are ANZ Bank and Westpac Bank, both very large Australian banks. Both of those banks have minimum deposit requirements. Both of them have all sorts of fees with regards to depositing money and just monthly maintenance fees and so on. I was speaking with the CEO of Westpac Bank a few months ago, and he was telling me, he says, gee whiz, we've just closed like 300 different savings accounts in the past month. And I'm like, gee whiz, in Tonga, a country of 110,000 people, that's a lot of accounts to be closing in a month. And so he's, last year there was a big push to be inclusive finance and all. And we opened up all these accounts and people made small deposits of $200, right? And then he says all these accounts have gone down to zero now because the maintenance fees have eaten into their savings. He says now we're just closing them all out. And so they basically made, people would put in $200, but that was like the minimum balance that they had to put in, and it's all gone. And plus, it's a pain in the hind end for people to have to catch a bus into the city, whether it's Nuku'alofa or Apia or Suva, and then just a full day bus ride back to where they live. And if you can make a very small deposit, it's not efficient. So with us, they can make a deposit at a center meeting, any amount. It could be 50 cents, it could be a quarter, it could be $2, it could be $10, any amount, it doesn't matter. There are no deposit fees. We open a savings account for everybody when they first join SPBD, and so our clients find it very convenient and affordable. One of the issues, there are other MFIs, like in Fiji, there are 8 other very small MFIs that compete against us that are non-regulated. They also have savings programs, but unlike us, they break the rules of the Central Bank of Fiji, and they on-lend their savings deposits. And unfortunately, in their on-lending of savings deposits, they are using the savings deposits to on-lend. They're not getting the money back, and they're using the savings deposits to pay for their staff. And so essentially all of the savings have now disappeared. And so unless the government of Fiji bails out these poorly run MFIs, these poor people have lost their money. So that was something I was aware of from the very beginning because it had happened in Samoa prior to our startup. And so we have a program where we work with Westpac Bank and with the reserve banks in each of our respective markets, and we take all of the savings deposits, we put them into segregated accounts with Westpac Bank. So I've got about 20,000 different very small savings deposits. I've got about 6 tiered 6-month maturing CDs, so there's always one maturing each month. Got a little bit of liquidity, and so that my clients can take money in and out as they please. The 6-month CDs earn me this much interest. I pay my clients this much interest. On that margin, we manage to break even. So it's not a profitable product or not even a lucrative product or anything for SPBD, but it covers the cost, and we think that it yields a very high social impact to our clients. The last, we're aware that we have very small time, is renewable energy equipment financing product. And so in the markets in which we work, as you might be able to imagine, access to energy is very expensive. For example, in Tonga, there are no flowing rivers. Okay, there are none. And so hydropower is not even a possibility there. Fiji has some hydropower, Samoa has some hydropower. So basically all of the energy is coming from importing diesel. And so they have some massive generators, and they're running those generators to get power. If it was possible, for example, to provide some low-cost solar power, there's a lot of sun in each of these markets, then people would have access to electricity to run lights past. The sun still goes down at 6:30, 7 o'clock in these markets. It's no different. And so it's helpful to have some power. So we have partnered with an Australian NGO that has helped us to identify, 1, the local customer needs, and then 2, to find appropriate overseas affordable technology solutions. And then they helped us identify local importers and distributors that can arrange for the importation and the shipping and the handling and the servicing of all these equipments. And then we came up with an agreement that laid out the duties for each of the parties. I thought it was very important that SPBD stick to its niche a little bit and not try to take on everything and go too far out of our business model. So we have only very limited marketing responsibilities. We provide all of the financing for the equipment. We provide final delivery of the product, but the servicing and all is handled by the distributor. Anyway, that is something that is just getting going in the country of Tonga, and if that is successful in Tonga, we will roll it out to Fiji and to Samoa. But I think that's another example of listening to the needs of your clients in terms of developing helpful and innovative new products.
Great. Thanks, Greg. And I think the points Greg made about savings are really critical. We know it's a product that clients need, but it has to be delivered by regulated institutions who are backed up, ideally, by deposit insurance. It's really, really dangerous to think about what can happen to poor people's savings if they're not properly regulated. Turning to Mohsin, we're actually really fortunate that the conference coincides with one of his trips to the U.S., so we'll hear about what's happening in Pakistan.
Okay, thank you very much. I am honored to be here. I think I will move from some very exotic islands in the Pacific to a country where most of you, what you hear is negative news in the media, or terrorism-related activities, or things which are really politically not correct, like what happened yesterday also. So the news from Pakistan on the financial inclusion space, I would say, is very optimistic and bullish. And I will share with you the new frontier products or the innovations that are happening in the financial inclusion space in Pakistan into different segments. Like, for example, we'll discuss the macro level, infrastructure development for financial inclusion in Pakistan, the different funding instruments that we are using for growth, products that have been developed for the sector, distribution channels that have come up over the last couple of years, and the synergies that we are making between different sectors. So starting with the macro level, and I think I will add to what Alex was mentioning in the morning, in the EIU report, amongst the 3 top countries that were ranked last year in terms of having the top legal and regulatory environment, Pakistan was part of Philippines and Peru. So that's where we stand in terms of a legal and regulatory environment. I think Pakistan is also amongst few countries in which in 2007 at the highest level, the Prime Minister of Pakistan approved financial inclusion or microfinance target program for 2007-2015. This was then tweaked to the realities that happened between 2007 and 2010 in 2010 with a new strategic framework for financial inclusion in Pakistan. We have got a coordination body at the top level where different stakeholders meet and debate about issues, challenges at the macro level and also at the implementation level. I will move on to infrastructure. I'm pleased to let you know that end of this month we are going to roll out a credit bureau at the national level for microfinance clients. This is I would say a sort of the epitome is that there's going to be relationships between the private sector, the microfinance institutions, and the public sector. So it's a public-private partnership arrangement, and we're pretty sure that this will help in improving credit discipline in the market. We're also amongst few countries that is right now focusing on very strongly on consumer protection principles and also on setting up of a consumer protection grievance redressal system. So we are debating the different models, and we're planning to roll that out in the next couple of years. In terms of distribution channels, again, I would say amongst few countries that now have different kind of models that are providing, I would say, alternative delivery channel for providing different kind of products. This includes, to one of the questionnaires in the last session, an institution that is using both mosques and churches to reduce cost and to increase outreach. Then there is a telco-led model in which Telenor and Tamir, the two, through their Easy Pesa platform, it's like the M-Pesa, that's where we are now moving beyond just transaction banking into M-wallet accounts. The couple of other banks, and Orescom, which is a leader, I think, Middle East investor, they've recently set up a microfinance bank in Pakistan, which will again be backed by their local telco operations, so providing banking services through mobile phones. There is another institution which is the largest bank in Pakistan called United Bank. They're planning to use agents, they're developing agents of different retail stores who will start providing financial services. I will then move into synergies, the kind of synergies that are happening. So microfinance in Pakistan is moving from microfinance to financial inclusion, and there are different kind of industries that are becoming part of this. So microcredit is no more a siloed industry. It is working in partnership with so many other industries. Like, for example, there is insurance companies that are using microfinance providers as conduit for increasing access to insurance services. There is telcos which are working with microfinance providers. There are commercial banks who are on lending to microfinance institutions. There are microfinance banks and microfinance NGOs. And so if I make different bubbles, what is happening is that these different industries working for different kind of services are now working together to provide financial access in Pakistan. Then there is synergies happening between microfinance sector and the corporate sector. So we are following a hybrid value chain model in which corporates and microfinance providers are working together in providing financing and completing the entire loop around the value chains. And I'm talking about both livestock dairy value chains, agriculture value chains, housing value chains, and also there's no discussion about white good value chains. And how do we build those partnerships around that? In terms of products, we've moved away from just credit product and credit, not only the cookie cutter credit services, but towards providing insurance services. And like Inez was mentioning, we are not just providing credit life, which I also think is more to do with hedging institutional risks, to now providing insurance services that meet the requirement of our clients. Like, for example, we did a research 4 or 5 years back in which we found out that one of the biggest demands of our clients was insurance or saving that would help in them in terms of meeting their life cycle events, like, for example, marriage of their daughter. And this is a very gender prejudiced society, so we generally look for marriage for daughters and education for sons. So that's the kind of services, insurance services that they are looking at. Similarly, there are now insurance services coming in terms of provision of health insurance services. Though there is a challenge in terms of the distribution network of healthcare services, but trying to address that issue. In terms of, I would say, finally, saving services, there is a huge challenge in terms of how do we compete with the informal sector, because both in the urban and in the rural areas, the most widely used method of saving, I would say even in the middle income group, let's not talk about the lower income group, is the Rozgas or the committee system. And that's what even my own wife or my sisters use. So how do we break that? How do we provide services that unlocks what is happening in the informal sector, and that at sometimes lead to certain risks also. So, okay, that's it.
Great, thank you so much, Mohsin. So we're moving to another perspective with Rajendra from Nepal.
Hello, good afternoon. My name is Rajendra Poudyal. I am from Planet Finance. It's a French NGO. Work more than 60 countries, basically providing microfinance consultancy services and rating to the MFIs globally, and providing technical assistance also. So in Nepal, basically, as an international NGO in Nepal, as per the law, we are not supposed to implement the program directly. We need to have one local NGO partnership. It means we don't directly work with the client. The situation in Nepal is different from the a little bit Pakistan and what other country, what our colleagues said, because Nepal is fully depend on the remittance. If you go to some villages in Nepal, it's very difficult to find a young population. For example, currently we are doing one project with the assistance of European Commission called Access for the Youth. We had a big problem of finding young people for the training, because most of them they have been either going Gulf countries or other countries for the jobs, these things. And regarding the inclusion, more than 80% of the Nepalese population, they're still using informal source of income, lending, or asking money from the people, like informal sources, not from the formal sources. And most of the MFI, they have been using the same conventional type of product, but what the problem they are facing means, most of the MFI were concentrated on the cities. And due to the inaccessibility of transportation, communication, and hardly any MFI wants to go to hilly areas. As in Nepal, only 17% land is Tarai, mostly hillies and the Himalayas, So there is a big competition, and one client takes loan from the one MFI and pay for the others. And there's a duplication going on, and they are even trying to introduce new products so that they could bring the clients from the other organization. It's a kind of not good competition. It's a bitter competition. But recently, what they have realized that since Nepal fully depend on remittance, they are trying to bring some product in remittance sector. And the commercial banks are trying to tie up with these microfinance institutions, since they have the already established network, and so that they could bring the money from channelize the money through the MFI networking. And second thing is about the insurance. Since microinsurance, there is no regulation in Nepal. No MFI can implement microinsurance products, but they have been doing with a different name. For example, they say emergency loan, emergency fund. They say client protection fund. They say social security fund. But government doesn't want to hear the word microinsurance. They are in the process of formulation of this law, but still. It is not like legal in Nepal to bring a microinsurance product. But what MFI are doing recently means they are trying to tie up with the formal insurance company. Like for example, there's a big insurance company like Prime Life is a private company. They are it's a partner agent model. So through this model, they are building up a kind of small micro insurance. The maximum amount is 50,000, 500 euro around. So they are tying up with some of the big insurance company and making a small like insurance program, basically livestock program for the like credit insurance programs. These are the things. And thirdly, some of the MFI, they're trying to use mobile banking. Mobile banking is a potential area they think that they can do, because since Nepal is a mountainous country, it's very difficult to even transfer the money. So they are now doing innovation and through this mobile banking. And one more thing, some of the MFIs in Nepal, basically in Nepal from 1992, they have introduced a Grameen model. And some of the big MFI like Northern Uttan Bank, they have their own products, some are better product. For example, they started giving a kind of loan, is called education loan. It's amounting 50,000 for the family member of the clients. Basically only to study vocational and the technical training for the period of 3 years, and the flat rate is 15% interest. Same thing they have introduced one new loan for the migrants who wants to go abroad, because most of the Nepalese they are abroad for the better life. I don't know, so I don't have the percentage figure exactly, but so most of the MFI they are launching a migrate loan, a migration people loan. A kind is around 1,000 euro. It's same like 15% flat rate, and the period is 3 years, 2 to 3 years. And some of the MFI they are starting new program like micro pension. It's for the period of 9 years to 14 years. They have to deposit monthly 100 rupees or 150 depending on their capacity. Then after for example 14 years of payment, they will get continuous pension, just double than what they have deposited per month. So this is the system some of the MFI have introduced. Yeah. So So as I said, basically the micro insurance is the very emerging issue in Nepal. Every MFI we go, they talk about the insurance. They need to shield the poor to go back again from the to poverty. So for that they are lobbying with the government for the formulation of this act. We hope it will be formulated very soon. Yeah.
I think that's great. Thank you, Rajendra. I think we'll,
Thank you.
just in the interest of time and trying to engage the audience at the end, I think we'll move to Alex to hear a little bit about the behavioral aspects that she's working on.
Can I pull up the presentation? Is that possible? And Inez, may I grab the mouse? Thanks. Hi, everyone. So I'm coming at this from a slightly different perspective. Spent about a decade in the microfinance industry working with Axion and interning at WWB, collaborating with Grameen as well, and most recently at Microfinance Transparency, which you'll hear about in the next panel by the CEO, Chuck Waterfield. And I've recently shifted gears and am now really focusing in an area called behavioral economics, which some of you might be familiar with, but really trying to apply some of the insights from behavioral science, specifically economics and psychology, to international development programs, and specifically sort of my sweet spot, which are microfinance products and programs. What I'm going to talk about today, once we get the presentation up, is an innovation that we've designed at Ideas 42 called financial heuristics. Financial heuristics is really trying to play in the space of the financial education world in the microfinance industry, and then we're going to be applying it also to the SME sector as well. How are we doing with technology? Working on it? Okay, great. So financial heuristics, just for those of you who may not know the term, really think about it as rules of thumb. So financial rules of thumb, there you go. So is the baby in the car? This is a behavioral presentation here. So we've all found a situation in which we make bad economic decisions, right? You're standing in line at a store, you went in for one thing, next thing you know you're at Target and you have a cart full of nonsensical items, or they get you with a magazine at the end, or a Kit Kat bar, whatever it is. We've all made really bad, poor, small financial decisions. But when we talk about developing countries and the poor, their scarcity is much more severe than our scarcity. And a poor economic decision, even as small as 50 cents or $1 or $2, can actually have a much larger impact on a poor person in a developing country than perhaps one of us sitting in the room today. So with that in mind, just to give you a quick overview, financial capability, which is sort of the new term for what we would consider financially literate or financially educated individuals. You can see that the majority of people in the global microfinance sector, these are very estimated numbers, guys, because there's not a lot of research on this, but the vast majority have gotten some sort of induction training in the microfinance institution. So I'm a new member of an MFI. I get a sort of educational session with the institution about how it is to be a client of a microfinance institution. There's also been a lot of mass market education, some group-based models, and then there is also this specific product-specific education. So how to use a micro savings product or how to use a microloan. And this probably overestimates capability, quite frankly. When we're thinking about the number of people in the world that actually have access to a financial product in the developing economies, we're looking at somewhere probably around 600 to 900 million individuals. So there's actually an enormous gap between those that have access to a financial product and those that have received some sort of education or some sort of training. And the real fear, and what we're seeing in more and more countries as the years go on, is that poor clients really don't have a strong sense of how to manage these complex financial tools. Sound familiar to anyone? Yes, it does here in the US. We have the same problem. And as access, financial inclusion expands and grows, and more financial products are being offered, microinsurance, micro savings, education loans, all of these things, if we don't ramp up the financial education of how to use and implement and really manage your household finances, we're going to run a really large risk of continuing to over-indebt people, which we have in a number of countries, and perhaps having really negative ramifications for the household. So the motivation behind our innovation, this financial heuristics approach to financial education, is that a large share of the population is unprepared to make financial decisions. There's just some literature citations here. It's an academic organization somewhat, so we try and root everything that we do in actual research and scientific methods. And sort of the problem, just to summarize the problem, financial literacy training programs represent one of the main pillars of technical assistance worldwide. There's a lot of money being spent on it, but actually we don't have any evidence, quite honestly, very little evidence that shows that any of the financial education programs that currently exist work. There have been almost no successful impact studies done to show that as an institution, if I train my clients, if I sit them in a classroom and I teach them how to do accounting or how to manage their finances, that it has any positive impact on the outcomes of their business or the use of the financial product that they're using from my institution. No evidence whatsoever. Yet, over $1 billion gets spent on financial education programs, even though we're not really sure if they work. Sort of a strange situation to be in. And so here's the challenge. We have little impact at the household level. And so why would this be? This is something that we're really interested in Ideas 42, and this is why we've addressed the problem. So just a representation. So all of the financial education programs really that exist worldwide, the vast majority of them at least, really represent this traditional accounting approach. So let's teach poor people how to do accounting. Let's teach them how to balance their budget or manage their household income in very technical ways, and it's usually classroom-based. There are some innovations coming out now where it's not classroom-based, but by and large they've been sitting in a classroom behind a desk or in some sort of training situation. And our approach is slightly different. So you've got your traditional accounting on the left on the next slide, and the rules of thumb, our approach, the financial heuristics on the right. So instead of teaching a poor woman in the Dominican Republic, which is where our test was done, actually with a Women's World Banking affiliate, AutoPem, instead of teaching the female entrepreneur in-depth cash management, we teach her a simple rule of thumb. So any borrowing from the business has to be paid back within 3 days and vice versa. It's just a simple little rule that she can learn the rule and try and apply it on a daily basis. Or an example, keep 2 drawers. one for your business finances and one for your household finances. Don't mix them. Make sure you're taking a wage for yourself. Make sure you're paying a wage, even if your sister volunteers in the store or your husband pinch hits for you on a Sunday afternoon in the store. Make sure you're actually paying those individuals so you're aware of how much cash is coming in and out of your business. So our approach is these very simple rules of thumb. And in the test that we did with WWB's partner in the Dominican Republic, this is a few years back now, the results of our program were really positive. So our bars are the gray bars. Hopefully you guys can see this okay. This might be a little technical for some of you, but the takeaway here is that in terms of weekly revenues, the traditional financial education approach actually had negative impact on the household. So they were overwhelmed with learning accounting or overwhelmed with doing this cash management, whereas the rules of thumb showed a positive impact on the weekly revenues of the household's business. On the left side, you see the share of reporting practice. So what our goal is now is to take the simplified and lower cost approach to financial education and scale it up globally. So we're working with a number of partners worldwide in a number of different regions to try and show that you can do financial education, have a positive impact. This is done with a randomized controlled trial for anyone who's interested, and actually start to improve that financial capability pillar, which we all talk about and we all really want to make sure that we're investing in. So it's an innovative approach. It's a little bit different. It's definitely rocking the boat a little bit in the sector because we've all been very tied to one thinking around financial education for many years. So it's a little bit controversial, but we're really trying to back up our approach with evidence and with data and to really show in impact studies and RCTs how the positive effect can be made. Thanks.
Great. Thank you so much, Alex. So thanks, everyone. I think we're going to go straight to Q&A from the audience and see what questions you all have.
I have a question for you, Alex. That sounds fascinating. I just want to know what countries you're rolling it out, and what are your plans?
So I'm in sort of strategy development right now. We'll definitely be in Southeast Asia, East Africa, and a couple of more trials in Latin America. I'm doing my partner sourcing now. My goal is to find institutions that already have a commitment to doing financial education, so they have some sort of experience already implementing financial education, and that they can really show that they're committed to improving the financial capability of their clients. My goal is to really build a business case for financial education. It hasn't been built in the past. Financial education is largely subsidized by donors or by big bilaterals or places like IFC. And my goal is to really try and help institutions see that it can improve their bottom line as an institution if their clients' revenue generation at the micro enterprise level is improved as well. So I'm looking for institutions that are really willing to invest in the financial education program within their institution, and then hopefully we can make that sustainable over a few years' time. So I'm definitely looking for partners. If there's anyone out there that wants to talk about this, I'm happy to talk about it. Great. But yes, East Africa, South Asia, and Latin America for the moment.
Hi, sorry not to pick on you, Alex, but just a quick question. How, if entrepreneurs learn the rule of thumb method, how do they bridge into getting into formal mainstream ways of learning accounting or bookkeeping or paying their taxes as they grow bigger and want to sort of get to borrowing from banks or whatever the case may be?
Sure. So what our research shows is that at the micro level, again, this might be a little controversial, so bear with me here, but they don't necessarily need to know some of those other pieces. As they grow, however, they do need access to more formalized. So we're actually testing an SME level approach using the financial heuristics design concept, but it's a more kind of robust set of rules of thumb, and then would link to more formal practices as well. We're not saying that MFIs or financial institutions should replace what they currently do using classroom-based. We think, though, that especially at the micro level, there's a more effective way to get clients over that initial hump of really just managing their businesses and managing their revenues in a responsible and positive way. But it doesn't necessarily mean that it has to replace long-term investments in financial education. We're also testing technology-based financial education. So we've already done some tests in Uganda using SMS, for example. So actually doing financial education through SMS using mobile technologies. And we also, when I was at MFT, we piloted Microfinance Transparency, sorry, we piloted a sort of mass market campaign financial education as well, which we'll also be testing with the financial heuristics design model as well.
Great. I think there are a couple questions on this side. Yeah.
It's a question for Inez. If you can expand, how are you approaching the Unilever Shakti Entrepreneur Program with a worldwide WWB? Given that the Shakti program, they spent like, if I remember correctly, like $38 million in marketing so that the program would work. And so I think it's an incredible program. They expanded it to many countries, and so it's great if you can expand on how you're adopting the program to your organization.
Yeah, I think maybe a little bit of a misinterpretation. I was trying to suggest that we can borrow from these programs the business strategies associated with designing products at a price point and a quality level that the low income can afford, and look at the microinsurance sector and break down the problem into a high quality product that achieves tangible benefits that's affordable. And so in our case, it's the beginning is the hospital cash product, and the second generation will be dreaded disease coverage. So it's basically, I was drawing the analogy for the room from the BOP strategies that Prahalad, first of all, pioneered into the microinsurance sector. But just to add to Alex's work there, I mean, I think in our case, Citi has been very generous, I think, in funding us as a kind of a little bit playing around the edges of financial capability building. And so we seek to add we are adding these rules of thumb into the work we're doing with SEWA, which is a institution in Gujarat, which is well known, I think, in the world. But they've had a lot of financial education. They were one of the pioneers of the core curriculum that really is spread out around the world, developed with MFO and Freedom, and probably other people in the room. And what we found was actually when we did the analysis in the pilot, they had a kind of an 8-hour program, and clients remembered actually very, very little of what they were supposedly learning during that program. So we've basically downsized that curriculum to a 45-minute workshop, but it is, and we've pushed all of that rules of thumb stuff through the interaction between the frontline staff. In this case, our pilot is actually with the Bank Satis, and they're ladies from the community that have been hired by SEWA to do the product work. So they're a sales force, and they go out and they sell credit and savings, and they collect repayments as well as deposits. And the whole trick is really, in terms of sustainability, is not only proving what works and what doesn't, but also the cost piece, which is essentially if you can embed that in the conversations, or using your mobile, which they have PDAs with video capability, as well as getting those messages through the phones. That's really where we would see a lot of potential.
All the touch points, right? I mean, any touch point with a client, you can turn into an education moment, a teaching moment, which is the idea, yeah.
Okay. I think we have time for 2 more questions. I know Alex has one, and I think I saw one more on this side. So.
It was a great series of presentations, but on the, if you go back some time, I used to think about microinsurance or financial literacy as just, as long as the microinsurance wasn't totally mismanaged, it was a good thing. I mean, it could be done, but and financial literacy, would be a neutral or a good thing. But then I started as it's now coming out. And you suggested this, Inez, that a lot of the credit life insurance could arguably be said that basically MFIs are insuring themselves at their clients' cost. And this seems to be maybe not such a good thing. Financial literacy, in an off-the-record meeting of microfinance leaders in December, an Indian banker said, well, financial literacy, what it's about is you kind of educating the client on some level, and then it's all their responsibility. And then as a lender, you don't have any responsibility more because they're educated. They should know better if you're offering them something that isn't really good for them. And so I'm wondering, as we kind of embrace these basically good concepts, is it kind of just the natural evolution that we would start in these in these very basic and products that maybe aren't really that useful, but we evolve? Is there a lot of risk here for us? Is this, and where's, what do you make of these critiques of some versions of microinsurance and financial literacy? And if that's to anyone.
Anyone want to tackle that? Alex?
I mean, just not answering your entire question, Alex, but just a thought. So I sort of see it more as a missed opportunity, right? So iteration is great. And so in our design lab at Ideas 42, we iterate constantly and are always improving products and programs. And that's fine. But I think on the financial education side, what we've done, because we haven't measured, because we haven't actually taken stock of are these programs effective and really spent money on the monitoring and evaluation of these programs, we know that it helps with attitudes about financial services. We know that it maybe helps with some knowledge, but we haven't actually measured behaviors. It's more of a missed opportunity than anything else. And by missed opportunity, I mean we've spent millions and millions and millions, more than that, $1 billion on financial education when we're not really sure if it works. So it might be okay, not harmful, that we start with a very simplified approach and then over years we improve it. But why not kind of take a pause, really start measuring what we have so that we're not wasting donor monies, that we're not wasting client time. It also represents a huge resource suck for institutions, both human resource and financial resources. As Inez talked about, it's really expensive to do these education pieces. So if we're not even sure they're working, it's more just sort of a shame, really, that we're not sure that the products work. On the microinsurance stuff, I mean, it could be even more detrimental than the financial education.
Yeah, I think there's sort of just one sort of interesting dynamic when it comes to insurance and the poor, in that the most potentially high social impact types of microinsurance, like health and agricultural crop insurance, are the most difficult to provide.
Right.
There really isn't a sustainable business model yet for those types of microinsurance. Credit life is super simple and, as people have indicated, profitable, and it's everywhere. And so getting from that to the more high social value types of microinsurance is where the innovation needs to happen.
Right.
And people are experimenting, and particularly in sub-Saharan Africa right now, there's a lot of experimentation around agricultural and crop insurance, but we still have not seen any scaled models that are sustainable without significant subsidy in those two areas.
I think
how are we doing for time, guys? We have time for one more question. Okay, can Greg make a quick comment, and then Greg?
Yeah, with regards to financial literacy training and insurance, I think it comes down to the design of the product as to whether it makes a big social impact or whether it's just a piece of rubbish. And so there are plenty of financial literacy training programs that I see in our region, mostly led by the commercial banks, that are absolutely worthless in terms of value towards the BOP client base, and actually just serve the needs of the commercial bank and make the donors feel good. I think, for example, and likewise with life insurance, you can design a very impactful product, or you can design a product that fools the client and basically takes advantage of them and makes you a very nice return. So it comes down to the design of it. With regards to financial literacy training, I think that the most impactful, or financial literacy training, and I'll put it underneath the broader umbrella of boosting the small business skills of our micro-entrepreneurial clients, because that's really what I want to do. I want to boost the small business skills of all my clients are micro-entrepreneurs. We only work with micro-entrepreneurs. And so we find it very helpful. We've carved out about 12 minutes of every single weekly meeting, and we do a micro lesson every single week in every meeting. And so my center manager, the person who's the field officer, will give a very small discussion around one very small piece of business for about 3 or 4 minutes, and then they have a bunch of thought-provoking questions that they will then lead the ladies through over the course of the next 8 minutes or so. And that gets the ladies engaged on a very practical basis in applying that little 3-minute lesson about perhaps pricing or distribution or advertising or branding. You know, and we wouldn't talk about advertising, we don't talk about revenue, and we don't talk about equity, and we don't talk about, you know, things that are just that are not really relevant to them, that are outside of their vocabulary. And you need to boil it down, and if you do it every single week and it engages them and they start talking about how it relates to themselves, then I think over the course of a year or 2 years or 3 years, you can begin to make a difference.
Great. Thank you, Greg. Thank you, everyone. I think we're going to have to stop now and transition to lunch, but I wanted to thank the panelists. Great presentations and really good questions from the audience.